And we are live. Rob, good to see you.
Good to see you.
And we'll see each other at the Acuma conference coming up in a couple weeks. So be fun.
Be still my heart.
So you have any other September? The busy travel months, right? You're going to be all over the place these next couple months.
I have five five events.
5 events. There you go. So
Yeah, couple private ones and a couple state or regional events.
okay, love it.
But then it dies back down again in October. Um, I purposely took the first half of October off. Um, but then there's the national.
Vegas.
Just made my plane reservations today.
There you go. Yep, I'll be there. So uh,
It's
yeah.
a cheap plane ride. Oakland
Hey,
to Las Vegas is only about 95 round trip.
Oh, really? Wow, that is cheap.
Yeah.
hey guys,
Yeah.
can you hear me okay?
KP, there he is. What's going on, Kevin?
Hey, I swear I've been trying for 7 minutes. There's a Zoom link that doesn't work. Then I tried the Google Meet, it didn't work. And then I just did the one tap mobile and I emailed you. Can you email me like a hyperlink where I can just click it and then boom, I'm on?
Yep. I'll send that to you right now, and then we'll go
Thank
ahead
you, brother.
and get rolling.
Kevin,
Perfect.
Rich was suggesting that you were so ashamed about University of Texas that you weren't even going to show up on the show.
No way, dude. I'm such a positive person. On the road, held their team to 14 points, still in the game. Dumbass coach didn't kick 2 field goals. I love it.
I was a little surprised that they went, and I get it. Everybody goes for it on fourth down now, but yeah, I felt like that game. It was clear. It was very evident early in that game that both teams, with new quarterbacks, were going to have, game plans designed to kind of protect them, and that it was going to be kind of a slobber knocker. But
Right.
yeah, I
Right.
mean,
So
Wait,
you're right. So
hold on, Kevin, hold on. Is that an Ohio term, Rich? Slobber knocker?
that is a Midwest slobber knocker.
I have heard that one. But your point is exactly the point I've been making. It's like if you're going to play conservative, then kick field goals on fourth down.
Right.
That is conservative play calling. Like you can't have a conservative game plan around a young quarterback and then never see a fourth down you didn't like.
Yep. Yeah, no, I agree. It was, and Sark's great recruiter, great offensive mind. He'll be fine, and they're going to have a great long run there, and will be in the playoff this year. That's a very good football team. But yeah, just some of the game management stuff. It seems like it's a little off with him, but we'll see. You live, you learn, and like I said, that's a team even with 3 losses that's in the playoffs. So, all
Well, let's get started here, Rich. I don't want
right,
this
sorry,
show to turn
sorry. So,
into a slobber knocker.
right, I threw you off with that term. So, all right, let's go ahead.
Well, yeah, Zoom said I'm a panelist and I hit that link and just doesn't.
You're in as a panelist.
I know it just doesn't do
It's
anything. Like
that's the
there's
panelist.
no
Let me hold
Wait, wait a minute. Is Kevin supposed to lead the industry in technology?
on.
And he's, he's using
trying.
he's
KP,
using a can and a string to call into this.
I'm shooting you one more link, KP. That might be the okay.
I think I got the registration link just now.
Okay,
But I am registered. I seen a Zoom link.
I think I sent you the proper.
But now the industry has his cell number, I think, there, right?
It's
That's
possible.
all good. Bring it on. I'm so approachable. Bring it on.
All right, let's go ahead and get into it. This is the big picture presented and sponsored by our friends at Depth for nearly 2 decades. Trusted marketing partner of fintech shaping the mortgage industry. Fintech marketing pioneer Carrie Milam, her two excellent EVPs, Leslie Colley and Lindsay Neal, lead just an incredible firm that does such a super job with brand management, strategic communication, public relations, marketing. If you need your story told, they're the ones to have to have it done for you. And you can find them at depthpr.com, or just get a hold of Rob or I, or Carrie, Leslie, Lindsay, all very active on LinkedIn. You can find them all on there. So thanks, Depth. My name, Rich Swerbinski, with Onward and Upward Consulting. As always, joined my esteemed colleague and co-host, Rob Chrisman. KP, it defaults to my background, my Christmas background for some reason. So you may want to adjust that, or, it freaks people out when they see my background behind somebody. But
Rich, you should have made a football Ohio State or
I
whatever.
thought he was trolling me. I thought he was trolling me, and that was exactly what he was doing. I
I
was like,
swear.
great.
It defaults to that for all guests, so you can send your complaints to Robbie Chrisman. But yeah, so that's that. Rob, good to see you. And how's things in your world?
Good,
Good to hear.
very good.
And this week, very, very pleased to be joined once again, regular show contributor, the chief lending officer and partner at PRMG. It is our friend Kevin Peranio. KP, thanks for making time for us, and really looking forward to the conversation today.
Always an honor to be with Rob and Rich. I mean, it doesn't get much better than that, not just in our industry, but anywhere.
It's
Because does the possibility exist that those two teams will play again?
very good.
Yeah.
Yeah, playoffs. Yeah, I mean, I think, yeah, it's good chance, so I would say.
Yeah, I was there last year. More terrible in-game decisions that cost us yet another winnable game. So hats off to Ohio State for being better coached.
Rich, was that a Mickey's Big Mouth that you just threw back? What was that?
No, I wish. It's a Celsius. So it's
Oh, I gotta get you on Goat Fuel.
Go
I
Fuel.
got, yeah, it's
New
so the Goat. So Celsius, Monster, and Red Bull, they all crack me out so much. But Goat Fuel is by Jerry Rice, and his daughter is the CEO. So it's a female-run business. You know, the GOAT, greatest of all time wide receiver. It's got cordyceps in it, so it's kind of mushroom based. It's kind of more of a mellow. I'll grab one here in just a second to go with my venti Aussie refresher from Starbucks. I'm gonna get totally jacked up today.
Goat Fuel. I'll have to remember that. That's cool. I'll have to check that out. So, Rob, have you tried Goat Fuel yet?
I haven't. I just was drinking some chocolate milk after my bike ride, though.
Okay. Okay. So there you go. Old school. I like it. All right. Well, there you go. So, Rob, again, no shortage of news headlines to sift through as we get into things this week. We got the Trump Lisa Cook thing that is obviously going on. We've got a potential declaration of a national housing emergency. Trump throwing that one out there, and Scott Bessent, of course, making the Labor Day uh, diner breakfast interview circuit, where just talking about the economy, kind of goals of the administration in the fall, continued to talk about housing and all of these breakfast interviews. I think the exact term was, one of, if not our top priority as an administration for the fall, really leaning into affordability, just from a policy and kind of direction standpoint with, the tariff stuff, not, I guess, in the rear view, but, more in the rear view and in the tax bill. So, Rob, your thoughts on all the latest and greatest in the mortgage industry this last week?
Well, the given my email traffic, the I think the big topic right now isn't so much an emergency. It's more the Lisa Cook thing, and I think it's important for people to remember that there's two issues going on there. One of which is can can the president just fire to replace a Federal Reserve official like that? That's one issue. The separate issue is, did she commit mortgage fraud? With regard to mortgage fraud, I raised the issue a Saturday or two ago because the Wall Street Journal did a great piece on occupancy fraud and Pulte homes and so forth. And Bill Pulte, who seems to be spearheading that. And you bring up the issue, and when people write to me about it, I say, well, we'll see what happens here, because what's going on in Texas, of course, is we've got the Attorney General situation, which is a very parallel, if not identical, situation of occupancy fraud. And how come no one's talking about that? And if we're going to prosecute Lisa Cook, shouldn't we also prosecute the Attorney General of Texas? Which makes all the sense in the world to me. So fraud should not be a political issue. Yet it's become politicized, which I don't think is good. But getting back to the ability to construct the Federal Reserve uh, to the president's liking, I'm not a fan of that. I like the independence of the Federal Reserve. I like the checks and the balances and the nomination process and the review and so forth. So I don't necessarily think that it's in the best interest of interest rates or the markets to have a Federal Reserve who's going to do what the president wants the Federal Reserve to do. Because ever since the Federal Reserve was invented, presidents have wanted lower rates. And the Federal Reserve having its staggered term like that and having being an independent body has the ability to make decisions that aren't politically motivated. And I know, Rich, you and I differ on the reaction time of the Federal Reserve and so on, but I like its independence. And I think that the long-term problems of having a Federal Reserve that is at the beck and call of a president, any president for that matter, is not a good thing. But I know Kevin's very well versed uh, in this, and I want to hear his thought. I don't even know, Kevin, what your opinion is on this.
Well, I kind of have a different opinion, and I'll just say something probably that no one's heard before, but I kind of went a little wormhole here and you on the internet, and you start to see things like, well, why is this a big deal? They're killing Supreme Court judges and they're killing Epstein. He hung himself, whatever. I mean, they're like, this isn't that big of a deal. At least they're just trying to charge her for a crime. And I'm like, what a pessimistic, not to mention doom scrolling kind of view to think that our nation, could turn into something like we see overseas. So, then I just zoom back out and I go, you know what? It's political theater. It's pressure. It's pressure on the Fed. I can't say I'm a fan of it. I'm not saying mortgage fraud, okay. It's like I'm not trying to be put in a corner to where I have to say, of course I think mortgage fraud is bad, right? It's bad. So, does it rise to the level of, did she know? Is there a lender that coached her through this? Is she going to sue? Is she going to uncover some emails and say, well, my lender told me to do this, the LO and whatever in Michigan and Atlanta, they're the ones that told me to do this. I mean, how far does this thing go? And so, at the end of it, I just go, it's just theater to put pressure on the Fed to try and get them to do what they want, which does attack the independence of the Fed. And I got to tell you, I'm with you, Rob. I think the independence of the Fed is a big feather in our cap. I mean, if anyone asks what we do as an economy, I mentioned this on my video the other night. We're a capital economy, and it's about money. Like, we have deep pockets in this country. We are pools of liquidity for mortgage-backed securities. We are pools of liquidity for treasuries. The dollar is the currency of the world, and so there is full faith and trust in a system like that is a capital economy. And so look at the stock markets ripping. So I think that if you threaten that part because of the independence being threatened, then I think it's not the right path to go down. But I think they're willing to go, hey, let's see how far this goes. Maybe we'll just shoot our shot. And if we can steer the board, because I think what happens is that they replace her and then they replace the lady who went to go teach at Princeton. They now have 4 of 7 votes, which in the beginning of the new year, they vote on who the 12 voting members are, and then it gets really influential. And so they're trying to shoot their shot. Again, I'm not sure it's the right thing, but, the Fed has always been biased. The Fed has always been led by mostly economists that are left-leaning, right? That's just how it's been for a long time. And so, they waited too long to start. They waited too long to start, to start raising rates. They waited too long to start, cutting, and they're kind of a slow, methodical machine that's in charge of a lot. And so, it's so mucky and gray that I don't think there's a right answer. And so we'll just kind of sit back and eat popcorn, and I guess we could talk about it and see what happens. Let the courts handle it, right? I mean, isn't that the ultimate judge?
Well, let's not bring the courts into this, or the Supreme Court for that matter. But I think it's interesting that the 30-year bond, not that mortgages track that, in fact, mortgages don't, but 30-year bond is sitting up there around 5%. It really hasn't done much. It's a 5%. And even if the Fed cuts, I assume they're going to cut, that'll drive overnight rates down. And Rich and I have talked about this in recent episodes. There's a psychological benefit to a cut. And Rich makes the point that, if you're getting a small business loan, for example, it can help small businesses to some degree. In terms of actually more, seeing what happens with mortgage rates, I continue to remind audiences that, you know, mortgage rates are set by supply and demand, and investor interest, and loan level price adjustments, and the cost to produce a loan, and G fees, and it's not a slam dunk equation to set a mortgage rate. So it's nice to see mortgage rates coming down. Obviously, that helps people who are refinancing. Arguably, helps people who are going out to purchase a loan, a home. But uh, the last rate cut or two, I don't think has had. In fact, I think didn't mortgage rates actually go up to some extent after the last rate cut? So I don't know. I mean, we can't kind of sit back and just watch. But Kevin, as you know, as anybody in this industry knows, I mean, there are millions and millions of borrowers and millions of households who could be potentially impacted by a move or not a move, and so it's high stakes. But I think you and I are in agreement. The Fed needs to be independent, and I don't think we're heading in that path.
Yeah, I will. I'll just add. You bring up some really good points, and Rich, if you want to chime in, feel free to interrupt me. The bond market and institutional traders or treasuries. I mean, they're really dictating the path, right? So the Fed is always playing catch up to the bond market. So if we want to know, like, in real time what the smartest people on Wall Street think, I say that in quotes because they are, but sometimes they call them the Bondinistas because they're kind of revolting, and they use their leverage and power to maybe do something that isn't necessarily data driven. They don't do it a whole lot, but it flares up every now and then. But what's interesting is they have been screened. So the 2-year Treasury yield is really the thing that dictates what the Fed should do or will do. And it's been at 380, 370. That's well below 437. We've had room to cut 25 basis points for months. And I'm not just talking about the Liberation Day April kerfuffle. I mean, we have a slowing economy. And so when short-term yields go down, it is saying, hey, our economy is slowing, labor is weakening. Yes, we see inflation, but maybe it's not as big of a problem as a slowing GDP and slowing labor growth, which I think Jerome Powell finally admitted as such in Jackson Hole. So we've seen rates do nothing but go down all year with no rate cuts since last December. And now to zoom back a year ago on September 18th of 24, after that 50 basis points cut, the next month, the October jobs report was strong, and it was followed by multiple strong jobs reports, which are about to get revised down next week with the QCEW, I'm sure. But the strong jobs reports in October and November and beyond are what drove the 10-year Treasury up into those higher levels. And again, that is the market. While the Fed was cutting in November and December 25 and 25 for a total of 100 basis points. So this time around, we have a labor report tomorrow. All signs point to, okay, if it's 75,000, maybe it's a beat on the headline, but that's not enough job growth to keep up with population, although that number has come down on what it's required because the borders are closed and we're not letting new workers in. So it'll be interesting to see, you could have a headline beat tomorrow and then further revisions down for June and July. And so, we'll watch the bond market. And I'll make one last point. You brought up an incredible point about the 30-year. What was ironic was last week when the lawsuit against Trump saying he does not have legal standing, the ruling, in a federal court, not the Supreme Court, a federal court said he does not have the right to do all the stuff he's doing with tariffs. The 30-year went up 10 basis points in about 2 trading sessions. And the reason why is because we are raking in $30 billion a month in tariff revenue, a tax on consumers and big businesses. Mostly the businesses are eating it. Where's Elizabeth Warren clapping her hands? She's been wanting to tax billionaires her entire career. It's finally happening. The billionaire corporations are being taxed. They're eating tariffs. Consumers are eating it more and more and more, but not as much as people feared. And that's $30 billion a month in 2 months to pay down the debt. If that is threatened with this lawsuit, the 30-year long bond institutional traders are like, dude, we will have systemic inflation because of the growing debt and deficit that was actually shrinking because of tariffs. And so you talk about being conflicted in all these competing ideological thoughts in everyone's heads. And, you know, I was reading Axios, which is like extremely left-leaning, but I love their reporting. And they were like, hey, man, you know, the tariff revenue is actually good. We're at $163 billion in tariff taxes raised through July, all going to pay down the debt and deficit, which regardless of party, everyone our whole life is like, we're going to saddle our children and grandchildren with debt. We're on an unsustainable path. Well, what are we doing about it? This is finally something actually being done about it since the Clinton era. And so that was why the 30-year went up. So this bear steepener of 30-year yields going up, but shorter terms coming down because of Fed rate cuts and slowing economies is a very interesting thing to watch.
Do you think the consumer will just will I mean, the question I have is, why is the economy slowing down? As you know, the economy is driven by jobs and housing. And if the job market is weak, housing, you know, pick a statistic. You can find strong statistics, you can find weak statistics, but it seems like the consumer is slowing down somewhat. Any idea why?
Well, I would say 2 things. I'd say labor is number one. So labor is the number one reason. So if you look in the household report, okay, there's the establishment survey and the household survey. The last one, I think there was something like 263,000 jobs lost. Households saying we are losing jobs. And so I'm really interested to see in the data where they revise June and July and then show us our first glimpse at August, where who knows how quickly people are getting paper surveys in. Don't get me started there. But if households are losing jobs, they're not quitting as much. The quits rate came out. There's less job openings now than there are people unemployed, according to the JOLTS report this week for the first time since 2020. It's about labor. And, you know, there is nothing more disinflation or deflationary than when your income goes to zero. And I think that's what people are worried about. And so, you know, what am I going to go buy a new car with the higher rates that the Fed has had, you know, in a restrictive level, higher for longer, when I may lose my job and it's harder to find one? You know, am I gonna, you know, I just went to Chipotle and I scarfed this thing down while I was trying to figure out how to get on the freaking Zoom. So shame on me. And it's $20
I know.
for $20 for a bowl of Chipotle. Like, are you kidding me? Like, I mean, so people aren't going to go to Chipotle. And by the way, in their Q2 earnings, same store sales was down. People are starting to trade down. I'm going to go to Del Taco. There is this incredible taco stand at flag football for all my kids tomorrow, and the tacos are $1.50. What a deal! I wish you could eat
Hey,
there
Kevin,
7 days a week.
Kevin, go with the veggie entree, because you don't know what kind of meat you're eating at for $1.50 there. Take it from a food science major. All right, take it from a food science major. That got to question that. But I think you're right. I think that if I am you know, if my job is, you know, if I'm okay with my job, even so, am I going to go out and spend? And I think I saw uncertainty flash up in the notes there, I think from Cat or somebody, that I think that given the headlines and given the administration and given the tariffs and given this and given that and given the economy, yada, 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 if I'm uncertain about anything, an uncertain consumer tends to hunker down, right? You're a team on the football field and things aren't going so great, the natural tendency is to kind of hunker down and not maybe take chances. And so I think consumers are in the same boat. I mean, if I'm thinking about if I need a new washer and dryer or some kind of TV, I'm probably going to go to Costco, or I'm going to go to Craigslist, because you know, those things have already depreciated, and I'm going to save money by buying a used TV or a used washer and dryer because they're less expensive. And I don't know the impact of tariffs on any of that, but the press has certainly said, "Oh my gosh, this is going up," and gee, the tariffs on India are doing this, and then you look at the headlines, and there's China and North Korea and Russia, looking at military parades. There is a lot of uncertainty out there. And so, once again, if the consumer's uncertain, they're not going to be going out and buying something new necessarily, unless they really have to. Rich, why my retirement plan is in water stocks.
Water stocks.
People need water.
Mhm.
People need clean water.
I like it, Rob. It's withstood the test of time. The water.
Hey, the Great Salt Lake in Utah is slowly going down, down, down.
Well, that's what I was going to say. Water stocks are great till it dries up.
But this is the
Don't
big
get me
picture.
started, Kevin. Kevin, if I've got a fixed income and I can go out and buy a fancy black and white designer shirt, or 10 gallons of clean, pure water for my family, I'm going to go with the water anytime.
I will tell you, it's funny that you called out my shirt. This shirt is 23 years old, and you can't tell. It's a lot more yellow than white. And so I am like a hoarder. I don't throw much away. Anyway.
This is from college. This shirt's from college.
I love it. You still fit. Actually, it's a little baggy.
I don't think they make polo shirts anymore, do they?
I think so.
I love polo. Ralph Lauren.
This is the big picture, presented and sponsored by our friends at Depth, market moving communication, brand management, strategic communication for fintechs, kind of moving the mortgage industry. Check them out at depthpr.com or find them on LinkedIn. Rob, your hand is up.
Sorry. Big fan of Depth, as you know.
Oh, okay. Yeah.
Going back to what Kevin was talking about, a Chipotle bowl is approaching $20.
Mm-hmm.
So I was in the store yesterday buying cereal. I like cereal. Have you looked at the price of cereal lately? Holy smokes. It's, at least where I was in a Safeway, which is a grocery chain.
Barefooted?
What's that?
Did you have Safeway feet? Were you barefooted?
No. What's that?
You don't know what Safeway? You know what Safeway feet are? When you're a little kid, and your parents take you to Safeway or Piggly Wiggly, and you walk around the store and you come home and you've got black feet on the bottom. I did Safeway and Piggly Wiggly. I had Safeway feet. Shout out to Safeway.
Shout out to Safeway. Shout out to Breakfast.
Oh, Rob, what'd you talk about on your mortgage Zoom call today? Oh, we talked about Kevin's feet as a child. So anyway, it's expensive. It's expensive. So yeah, it's like, $6, $7 for a box of cereal. And I was talking to my daughter about this, and she said, well, you get several breakfasts out of a box of cereal, but still it's not $2 or $3 unless you really search for bargains or buy, 10 boxes of something. So anyway.
All kinds of stuff in the chat. Joe Shaw was lemon lime on the Celsius, although cherry cola is the best flavor. We're out of it, but it's a good drink. And
supply chain issues, that's not good.
And getting caught up. In Ohio, 3 bowls for $27. I DoorDashed Chipotle the other day just for myself. It was about $20, but that's with the DoorDash fees. But to the broader point, things getting and have been expensive in America for a while, and including housing, KP. And President Trump this week said he could declare a national, or Scott Bessent said the president could declare a national housing emergency. Rob and I have gone back and forth on this right now. Are we in a housing crisis? He's kind of more on the no. I'm kind of more on the home sales at 30-year lows. The average home in America now, 412,000. The income you need to be able to make the 20% down mortgage payment on the average size home in America, $114,000. 41% of Gen Z in a recent poll said they don't think they'll ever be able to afford a home. 42% of millennials, the same thing. KP, are we in a housing crisis? Is this a housing emergency? And what do you think of the levers that Besant kind of teased that could maybe be, the most effective short-term affordability helper, from the federal government?
Well, lower rates cures a lot. So that's number one. When I read that we're in an emergency, I just felt that they're doing the same, playbook as they did for tariffs. They're using like 1979 or 73, the emergency, Economic Emergency Act. They're just using that to allow them more leeway to do what they want to do. Right now with rates where they stand and like the stats you bring up, like 114,000, Unusual Whales put out a post yesterday that only 18% of Americans make more than 100 grand in a year. So, if the average, salary needed was 114, I think you just said, then, people, we're going to have to start marrying each other and, and get there, maybe have kids so our population doesn't decline. And that's a big reason, by the way, not to go off topic too much, but, we'd be nice to have immigrants come to this country because they help us grow our population and they provide a labor force. And if done right, it's a great thing. So I don't think immigration itself is a bad word. It shouldn't trigger anybody. So, I don't know how long, Trump wants to, or how long Obama did, or go down the list of every president. Every time we got into a really rough spot in we're about to go broke debt and deficit cycle, we closed our borders. And so I don't know how long it's going to go on. And I don't know how many people are going to be allowed in, but we need more people here producing more output and children and homes, by the way. So we still have a supply issue. So my fear is that, when rates come down, they've been coming down, they're going to continue to come down. Joe asked a question about, we're going to get down to 385. I think we need 2 bad jobs reports in a row, or at least 2 out of 3 to get the 10-year under 4, in my opinion. And if you have
Trump, now he's got his new stat guy in there. We could get those pretty quick, right?
Yeah,
it's
yeah.
I would agree. It's like 2 bad jobs numbers. We can get one tomorrow, and then they could, maybe make one up next week, and maybe we could be at 599 30-year fixed by Wednesday, maybe.
Yeah. Isn't there a joke about like the president brings in his economist? No, so it's the mob accountant or something, and he said like how much money do we make? And the guy says, how much money did you want to make? Kind of thing. There's like it's like, what would you like the jobs number to show? If you want lower rates, let's make it look really bad. I don't think President Trump would want that.
It's going to be interesting because what do they want? It's going to be interesting to see how the jobs numbers play out, I guess, the next.
What'd you say, Robin? Robin, your first paragraph today. Figures don't lie and liars figure. I thought that was good.
Could have been, maybe not. Anyway, I think I had some other comment in there, but yeah, Rich. Let's hope the statistics are truly unbiased.
We'll see. My take on the old system was just, proven to be just really inaccurate and behind the times. So to me, any change on how they calculate jobs numbers, I just heard.
Have they made changes?
I just heard Chris Waller was on Pulte was on CNBC this morning talking about Lisa Cook, and then they had Chris Waller on after, and he was really getting into some of the BLS stuff and, just really in his mind how bad it has been, and how they're looking forward to kind of modernizing that and getting better jobs data. We'll see how that all plays out. The next couple of jobs numbers, it's going to be interesting.
Yeah, I hear you got to be careful what you wish for, because people write to me and they say, the true picture of the job market is not reflected in the numbers. I've got a brother who's, been out of a job for whatever and can't get work, or I've got, 2 kids and they're just graduated from college and they can't find a job and so forth. So the question is more accuracy, is that going to make the unemployment picture worse?
It's possible.
Right.
Well,
Yeah.
I think, if we're talking about independence of the Fed and being data driven, I think we just want it to be accurate but quicker, right? And so the problem with, the jobs data is we have to wait till these QCEW reports come back every quarter when the states go through all their records and then report back, and go, okay, here's what it really is. And so remember, if you remember last November, it was like, oh, just kidding, 860,000 less jobs actually
$1
created. Just kidding.
billion. Yeah. Yeah.
No big deal.
Mhm.
So it does get cleaned up and it eventually gets accurate, but the market is going to move tomorrow. It's going to move tomorrow one way or the other. It's going to move. And it'd be a shame that if yet again, literally in, a year and 3 months from now, it gets shown that what we hear tomorrow was wrong. So that's not a good data-driven system. I read so much good data in the Crispin blog. Whether it's from, ICE Mortgage Technology or Cotality or Case Schiller or I go to MBS Highway, and there's so much real-time data. How come we can't figure this out? I don't know.
KP, did you happen to see Chamath Palihapitiya? I think is he does the All In podcast. It's a pretty well-known podcast. Last week they dug deep on this, and Chamath threw out a proposal that was really, really interesting to me. It was essentially keep the Federal Reserve intact and doing all the things that they do currently, but the monetary policy and the rate movement mechanism part of it, let the markets decide that. He, talked about how like SOFR and some of the other like market-driven adjustments to interest rates, that, and you could make all this like job data like available on the blockchain, some of the changes they're going to be making. It's really, it's worth the listen, at least like that 10 or 15 minute part of that podcast. It's called the All In podcast, but it was
Yeah,
really
all
fascinating.
in.
Yeah.
Yeah, isn't David Sachs on that? Now he's like in the government, wasn't he on that? Yeah. So
Yep.
Chamath Palihapitiya is a famous investor for getting into Facebook early. He just actually came out with a SPAC. He's back in the investment game. He's been kind of quiet on his venture capital stuff. I would argue that the market already sets rates,
Mhm.
and so the market gets out in front of what the Fed does, and the Fed has to noodle around at their pace and make sure that, and I will say something to defend the Fed. Once you start something like they don't, like they were worried after doing 100 basis points of cuts last year, like, oh shoot, do we have to raise rates? So they're like, we're just going to hold. And they probably could have cut, but they want to make sure that, that labor is the driving factor why they do their next cut, and not necessarily inflation, which, to be fair, like it or not, tariff uncertainty was uncertain. It's the largest increase in the global trade order, tariff rates, in 70 years. And so it is worth pausing and looking. And so I don't think the Fed has to necessarily work as fast as I want the BLS jobs data to come in accurately.
Good stuff. And Besant teased, potential closing cost reductions, waiving the tariffs on construction materials, a couple other things out there potentially at the administration's disposal. The SLR regulation, that could, make it less penal for depositories to buy treasuries. They've teased, waiving capital gains on home sales, the Swerbinsky plan. Anything in there, KP, that, tickles your fancy?
Well, again, shout out to the Kristen blog. I read a lot, but I don't know. I guess it was Labor Day weekend. I just kind of like, I don't know if I checked out last Thursday because we had open house for our 4 kids and all, the parents were getting together. But I didn't know that. I knew the SLR was being done. I didn't know it was finalized, and that's a big deal. And so, basically like 2.5%.
To be clear, it hasn't been finalized.
Oh, okay. I thought the numbers were finalized.
No, I wish. Yeah, it's you would think we'd see something on that soon, but we'll see. So, but it was just yeah, kind of
I
it was talked about again in one of the Besant speeches, just as something that's on their radar in terms of something that could.
Okay, okay.
Yeah.
All right, then because I don't know if it was Saturday morning or Sunday, and I read that I was like, oh my God, how did I miss this? And so that makes sense. It wasn't, but it was written about, and again, we're a capital economy. Liquidity is everything here, and it's a big reason why the commercial real estate fears have never really come to roost. You know why? Because Papa Diamond and J.P. Morgan Chase are sitting on $1.3 trillion. They're ready to scoop up any building they feel is a good price and is cheap. And so, there is, the balance sheets are girded, they are overloaded, they have tons of cash. So if those capital requirements come down in actual policy, and we don't have to, go by whatever, the globalist elites say in Basel, that we're good. Then I actually think that's really good for the consumer. I think you'll start to see some more flow of money into consumer credit cards and loans and auto loans, and maybe you could even force some of these big banks to jump back in to the wholesale channel. Just kidding.
One other thing I wanted to get both your guys' thoughts on. It was kind of under the radar yesterday, but could be really meaningful. Freddie Mac increased their max LTV on 2 to 4 unit to 95%. It matches what for owner occupied, and it matches Fannie's requirement. It was one difference, but it did cause some in the industry to speculate. Could this be, the first step in a move to maybe consolidate the two behemoths into one before, taking them quasi public? KP, did you see that
I,
move?
I
Any thoughts?
I'm trying to look at Rob's picture. Is that a 2 to 4 unit there? Is he? I see another unit in the background, and
That's
is
his
that?
ADU. It's his ADU back.
That's my manservant's quarters.
Well, I will say that I was talking to someone about investment properties, and and people who build investment properties, like, overwhelmingly are people that build 1 to 9 units, right? And so it's like the smaller investors kind of go into these neighborhoods and fill in the cracks. And so it kind of makes sense that gosh, I don't know who I talked to yesterday. I think it was Trish over at Lenders One, and she was saying that her son bought a house, and I was like, well, is he going to rent out the other rooms to his roommate? But that's something I did, and I think a lot of people do. Well, he's not, by the way, but it's a lot of people do, and then when they get into a house, they'll buy something with multiple rooms or multiple units, and then kind of become a landlord from day one. I think it's a great strategy. I just think, I mean, it's a great thing that they did it. No knock on Freddie Mac at all in any way, shape, or form. I'm glad they expanded the guidelines. Separately, I mean, not a lot of 2 to 4 unit properties out there.
Mhm.
So, it's a very desirable thing to own. I just don't see a lot of 2 to 4 units for sale. You guys know I document some of the construction projects that I do with a buddy of mine. We have a 4 unit that we're about to refinance. We've been on it for 2 years. I've had to float this frickin' note, and we're going to put 2 ADUs in the back. But I can't do that through Fannie or Freddie because it's a rehab loan. It's a construction loan. I wish Fannie and Freddie would do bank statement loans for non-QM. I don't know why they don't want to. They already do cash flow, right? They do cash flow underwriting. Here's a program where you get to look at 12 to 24 months of bank statements. You must use day one certainty or AIM for us to do this program for you. And they will bring half the non-QM market down to what's more of an A paper rate, forcing us to use their technology in day one certainty and AIM with data straight from the source. So that's the product I want Fannie and Freddie to do. Bank statement, non-QM income. Like, you can't go anywhere with that. I can trip over a non-QM account executive on my street or two. And, it's $120 billion of the $2 trillion that's out there. You would think that non-QM is taking over the world. And anyway, I just think, I wish the GSEs would go into the bank statement space, because that to me makes, but I don't think it's going to happen, obviously, in this administration, because they're trying to shrink the footprint, combine the two, spin it out, make it public again, or republic, or republic IPO, re-IPO, whatever they want to call it. I don't know if you guys have any opinions on that, but, if, I like it how it is, but if it can be better, I guess, I'll sit back with popcorn and I won't say too much, either way. I just don't want rates to be worse.
Well summarized. So, KP PRMG, one of the lenders, really adept in all the channels of mortgage lending, the retail, wholesale, correspondent, and I just want, yeah, get your thoughts on the state of channels in the mortgage industry. Mortgage brokers, obviously, have seen a nice lift up in market share. I probably, depending on whose stats you look at, 23, 24, 25% of market share up big time from obviously where we were post financial crisis. But yeah, we'd love to just get your state of the union on the channels of mortgage lending from somebody that operates in all of them.
Well, I think, obviously we're built by originators for originators. Our founders, Paul Rozo and Robert Holliday, 24, years ago, literally in a week, around 9/11, is when we were founded. So we serve originators however they want to be served. I have kind of a unique take on it. Obviously, like however they want to be served. Like I don't put one channel over the other, and they're all different. They're very different. But what I'm finding is same as it ever was in the industry. The lenders with the deepest pockets and the biggest pools of liquidity and the biggest servicers and the biggest investment in tech, they're the ones that garner the most market share. And so if you look at UWM, they've been number one and they're only wholesale. So therefore, anything that they do and grow will grow that channel. PennyMac, Rocket, let's put them, 2 and 3. Rocket, consumer direct company, huge brand presence, spends so much money in advertising, and also has a very strong TPO offering. And then you look at PennyMac, they're, obviously they're in multiple channels, but they're, looked at as a servicer, right? And of course, they have a great TPO channels. I wouldn't exactly call them retail, although they have a retention team. And then there's Freedom that plays in the different channels. And so I just think when you're just naming 4 great companies right there and how much money they put into their plans, those are the plans that grow in a shrinking market. Fortunately, we're in a growing market. So, if we're going to do more volume this year than last year and each year keeps stair-stepping up, there are other entrants that come in and have a chance to, whatever model they decide to choose and go after, they have a chance to help grow that channel. And so I think it's kind of like, where your energy flows, where your attention goes, your energy flows. Is that what Eric Thomas says? So, wherever the energy is flowing is where, people are getting attention. And so, I think it's great. I think they're all going to grow from a dollar standpoint. It's a growth year, $2 trillion, a lot of business, and there's a lot more to go get. Rates are our friend. The trend is our friend. Lower rates helps everybody, every originator, every channel, every realtor. So big fan of where everyone's rolling.
Love it. Love it. Love the positivity and warranted right now, honestly. It does feel like things are starting to shift. The wind is starting to blow at the back after blowing in our faces for the better part of the last 3-4 years. So will be fun to see how this all develops. And KP, greatly appreciate you coming on today and joining us and giving our listeners and viewers your excellent insight. Appreciate it, brother.
Thank you. Appreciate it. Always an honor with you too.
Love it. And
Welcome.
to our attendees, thank you as always for spending part of your Thursday afternoon with us. We do this show live every Thursday at 3 p.m. Eastern. You can go to charismacommentary.com to get signed up for the live version of the show. And if you're watching the live, subscribe to our pod and our YouTube. Both have great followings. And you'll see this episode live on those mediums about 15 minutes after the live show ends here today. Rob, good seeing you. Looking forward to seeing you in person in a couple of weeks. And looking forward to breaking some bread together. So that'll be fun.
Yep. Thank you, Kevin. Thank you, Depth.
Thank you to Depth. Thank you,
Rich.
KP. And thank you to our attendees. And we will see you guys all next week at 3 Eastern on Thursday. Have a great rest of the week and weekend, everyone. Take care.
Cheers.
It's KP.